So you really have demonstrated, you've communicated with this investor community over time. And now with everybody else, you're trying to educate the investors about AI and the opportunities it brings forth. So I'm like very curious how you continue to do that, Ashim. So forgive me, that's my long
No.
prologue here. But
I think there's there's a lot of confusion that could be met. So I think the first piece is really articulating what you're focused on. AI is a really broad term, right? So it could mean a lot to a lot of people. Self-driving cars is AI, right? Algorithm and predictive engines are AI. So everybody there's personal productivity related to AI that you can do, right? In terms of when I open up my credit card statement, it can automatically show and identify fraudulent charges. So it's really saying, one, like, what are your areas of focus? We are focused on enterprise automation and clearly being able to demonstrate the use cases such as claims management, dispute resolution, customs, manufacturing processes, pricing automation, where you can say we are intimately focused on these areas and these problems. That's, I think, the first piece of being able to communicate to it.
It's been nearly 5 years since we last spoke to Ashim Gupta, CFO of UiPath. Back then, UiPath was a pre-IPO company and went public in 2021. Since then, the company has expanded beyond its RPA roots into broader AI and automation solutions. Clearly, a lot's happened since our last conversation. Ashim, welcome back to CFO Thought Leader.
Thanks so much, Jack. Great to be here.
Yeah. So, Ashim, I mentioned the broader strategic UiPath is taking. Can you walk us through how your role as a CFO has evolved in that time as well, and what key financial or strategic priorities have emerged along the way as you take this broader path?
Yeah, there's three things that come to mind for me. I think the first is making sure more than ever that you're not confined to the spreadsheets and to the PowerPoints, but being into the market and staying in touch with technology. That's important not just to be a relevant business leader, which a CFO in my mind needs to be, but it is also critical just to understand where is this ever fast market going. You get questioned by investors. You get questioned by your internal teams in terms of being challenged to say, where are we investing? Why are we investing? And if you're not in touch with the trends, if you're not in touch with, the different points of view that are there, honestly, the world is moving so fast. It's just very hard to keep up. The second is more focused on making tougher calls faster. As the move moves forward at a very fast pace, you got to quickly identify what's the past. And I think when you're in the CFO position, being able to make tough calls to say, we cannot invest in this, or identifying waste faster, because the level of investment to keep up and stay competitive and stay relevant is pretty significant. And then the third, it naturally dovetails. So my role has now evolved from the CFO job to also include the COO scope. And really what that means is in order to move fast, you also have to be together. So AI is not a technology question. It's not a go-to-market question alone. It impacts every single function, your services function, your partner ecosystem. And how do we keep all of those initiatives moving together and investments not for one function, but for the company, and making sure people are really well aligned and focused on a very narrow set of priorities so we can be focused, fast, and win.
Well, and again, I had explained it in sort of broad terms. I'm wondering if you can just reflect a little on all of what has been achieved here in terms of, again, there was a narrower focus, RPA, and now you're widely known more as an automation company. What's happened exactly? And that's my very simplified explanation, but please help us understand better what the evolution was here.
Yeah. So, for UiPath, like you said, RPA was simple rules-based automation. It had AI at its core always in terms of being able to emulate what humans do. we had to have the technology to see the screen and be able to take actions like a human. What actually expanded with our platform is that the simple automation or the rules based is not enough. We have to be able to we would be able to do the simple workflows for an organization, but now decision making, the last mile of those use cases, which required more intelligence, more thought, that is something that has become within scope for us, and we've evolved our platform. So we'll talk about it as well. I'm sure we'll be able to double click, but agentic and agents. So what's an agent? It is technology. It is giving technology agency using the foundation of those large language models. That now is inherently built within our platform. The ability to use all of the technology that's emerged over the last years, and being able to make decisions or take actions based on understanding and interpreting data. So you move from what we would call deterministic type steps, if this, then that, to probabilistic type steps. And then the second piece around AI, I think that has really emerged for us, is that you're never going to let AI loose in a way that is ungoverned. So how to enjoy the fruits of the freedom and the power of AI, but keep yourself safe and making sure there's a governance, there's an audit trail around them. Those are two pieces that we really expanded on. We call that our agentic platform. And within that agentic orchestration, which is really meant to govern how agents, humans, and robots all work together.
So you mentioned you're now the chief operating officer as well. And the last time we chatted, I would have checked the box that this is somebody operations-minded CFO. So I wasn't surprised to see that announcement, which came in the last year. You've been there 7 years. Tell us something about how that came about. Why was the COO title, your 7th year there? What, anything transpire, anything more that you took, explain how that role was.
Yeah, I would describe it in two ways. In some ways, nothing changed, and in some ways, everything changed. So when you join a startup, you're not confined by your title. Your role is dictated and gravitated by the priorities of the company, by growing revenue, and by serving the customer. So even as CFO, I spend so much of my time with customers, with our sales team, and really making sure that we were operationally connected. At the same time, as we went through our series of organizational changes last year, there was an importance to feel like there needed to be greater clarity in the organization of both my role and the expectations. And really what evolved is two things. There are certain functions that I have more direct oversight over, our partner ecosystem, our services ecosystem, things that are meant to enable and enhance our overall customer experience and our go-to-market function. Those types of priorities or organizations came under my scope. And then the second piece is really ensuring that go-to-market, product, and all of the enabling functions are connected. So like I mentioned, making sure that we're moving in a fast-paced world, priorities are clear, and we are connected. So as an example, when we launch a new product, how does that transpiring and connected into marketing in terms of the message that we're doing? Does that connect into sales operations to make sure we're monitoring pipeline and the build of pipeline effectively? Those are all things that have kind of moved and has seen my scope and my job evolve.
So as we're talking to finance leaders, it's clear they're all trying to understand better the ROI on some of the strategic investments they're making into AI. Is there something you can share with us about your experience? And again, over the last few years, one would imagine there have been some substantial investments here that have been made, and we're wondering if if you boil down a certain criteria, or maybe there's a framework that you've arrived at. Don't know. What would you share with us about measuring the ROI or the strategic value of your AI investments?
I think the first thing, it may be counterintuitive, Jack, but AI is at its beginning. So for me, the ROI is not a financial ROI. I actually think if you get lost in terms of the ROI on a financial or on dollars basis, you could anchor the company and eventually drown it. So I think the first wave is about learning. So if we launch a pilot internally, what are we learning from it? Are we learning the capabilities of what's possible? Are we learning the limits of a technology? Are we learning the risks associated with it? So for me, the first wave of any new generation of technology is not about how much cost am I going to save, or trying to rationalize a business benefit. The greatest business benefit is being contemporary and learning. So if you're not going to learn something from it, don't waste your time. If you're not going to focus to really understand what you're doing, why you're doing it, and understanding the things that are needed to be successful at it, that is the starting point to say, should we invest in this initiative or not? The second piece of it is really learning to fail at it. So I think with AI, the goal is to test the limits of the technology. Where can AI take you? So a lot of times we know what it can do. What a lot of people don't realize is what it can't do. And that informs two things. It gives you a sense for internally, okay, so then where does the product need to go? Where does our thinking need to go? The second piece of it is it gives you a sense for really the strike zone of what value you can generate today for that. So for me, learning is the forefront. The second piece I would say is really around decision making. So when I look at ROI, again, you go from learning to then the benefit that I'm looking for is speed. I think more than a profit margin, I think profit margins will exist through basic hygiene of eliminating waste. The investments in AI and the strategic value is faster decision making and doing things that are in benefit of the customer. So those are the types of things that we are investing in. Just to give you an example, when a customer comes in for a dispute, can I predict ahead of time what are the disputes that they're going to have? And using that, can I take certain actions by alerting my sales team to proactively engage with the customer? Those are use cases that are made possible with AI. So you move from basic order processing and dispute resolution to dispute prediction and customer engagement. Those are the types of things that we would experiment with.
You know, some of what has happened there over the last 5 years, I would imagine the go-to-market strategy has continued to evolve quite quickly at times. And as you said, decision-making, the relationships there, your involvement there has evolved over time. I'm going to ask you for some myths about go-to-market, some things that you realized are not as important, that perhaps at the start of that journey, there might have been too much focus on something, not enough elsewhere.
Yeah, I think at the start of the journey, you kind of like, the first one I would say is that levels truly matter. I think selling to the C-level, selling to the boardroom matters, but being connected with the teams that are implementing is as important for the executive of any software company as it is with your own field who is engaging with that team every day. So when you first started in go-to-market, you kind of do your relationship mapping and you say, yep, the CFO should be talking to the CFO, and those things exist and are true. But if you really want to be connected with the customer, you have to, as an executive, really go across all levels of the organization to get a true picture of where the customer is and how your company can add value to it. The second piece is that every piece of pipeline that doesn't turn into a order is a failure. I think it's important to look at the things that are delayed, the things that are, where the areas where you've lost, and really focus on those segments to understand what can you learn from. And then the third piece is you kind of take your largest customers, and you think that everybody's surrounding them. What's very funny is it's so easy to take that for granted and lose connection with the customers that are doing well, because we tend to go across your problem areas or the areas that you're not growing alone. But making sure you keep a relationship with the customers that are succeeding, and giving them as much time as the reds on your page, right? Like I said, we go to the areas that are having problems. And why that's important is because that connection prevents it from ever going red. And I look at the best sales leaders, I look at the best executive connections and customers we have. We stay connected with the customer, not just before the transaction, but after the transaction, and continue to learn from them, whether they're succeeding or whether they're failing.
I want to give you a sort of a hypothetical. The go-to-market team members are in a conference room down the hall from you. All the leaders, all the stakeholders there. Ashim swings open the door. What is it that they think Ashim is going to want to talk about?
I can be unpredictable. So it go everything from, is this deal going to close in the quarter to, how is this customer going? Like, why are they limited to just this? I'm a person who's pretty impatient and not fully satisfied. So generally I try to find what's missing from the equation. So whether that is our customer service, whether that is more dollars that we could be generating from this, whether this is like, why aren't we investing faster or more in this area for that customer? It really spans all of those types of areas.
So regarding investing, and again, we've touched on this a little bit already, but as a COO, one would think, I wonder if Ashim's making operational priorities, investments there are going to benefit from his new tour of duty versus R&D. How do you achieve that balance? R&D and the operational priorities that are out there, that balance of investment between them. Or do you look at the world differently? Yeah.
No, actually, it's something I've learned from Daniel quite a bit. Our success at UiPath is, if you look at the company, born out of Romania, we didn't have any U.S. employees until I think 2017, and very quickly we catapulted to the top of all of the analyst matrix, whether that's Gartner, Everest, etc. It's because the engineering and the product is authentic. So in my mind, like, the world can sniff out architecture, it can sniff out marketing really well. Good and great product is what wins the race. So in my mind, actually, R&D is the first area of investment for the company. The operational pieces, I think you have to invest in, but you have to be equally honest about being ready to deprioritize certain areas. And so I'm probably harder on the operational front than on the R&D front in terms of investment. And I would take swings in two areas. Somebody who's talking to a customer day to day, and somebody who is driving and writing code and really thinking about how to bring our platform to the next level. Those are kind of the two ends of the spectrum. Everything in the middle, to me, that is you start increasing to more points of operationalization. The farther you go away from the code and the farther away you go from the customer, that is really where I would say I am more maniacal about waste and budgets than on the other two ends of the spectrum.
Has the emergence of some of the AI capabilities prompted any pivots at UiPath or expansions in the product roadmap?
It's huge for us. So just in October, we launched what we really believe is maybe one of the most pivotal moments of our company. We unveiled our vision and strategic direction centered around agentic automation. I've touched on it a little bit, but agentic automation is taking the foundation for automation, and which is our robots and all of our AI capabilities to be able to emulate what humans do, and it takes it to the next level, giving agency to technology, and connecting them with tools such as large language models, such as prediction engines, to be able to automate more and harder parts of the overall workflow for a company. With that launch, we've gone into private preview around a number of our agentic products. Agent Builder, as an example, which is a tool for developers to build, evaluate, and publish enterprise agents. Those agents we really connected into our platform. They will work with robots to execute workflows. The second piece I think that's really important is we've changed our vision for the future. We thought our future, if I go back 3 years ago, was about simply humans being unleashed to do creative work and robots doing a lot of the work in the background. While we believe that humans should still be doing the massive creative work, we believe that agents, humans, and robots need to work together. And so agentic orchestration is a key part of our technology roadmap that we've launched. And so if you can think about it, there's nothing you will do, Jack, in the future that doesn't require an agent or AI, a robot to be able to execute rules-based tasks, and a human to be able to drive interactions. If you can orchestrate that, you've got one of the most powerful armies in the world to grow your business and to really serve customers and invent technologies. And that has been a huge pivot for us. And we believe is going to have meaningful impacts to our revenue as we kind of go through the next 4 to 5 years of our growth.
Can you reflect a little bit on the investment community, and just given what you just shared, how you have to share this vision with them, sort of educate them? This is what we see. Here's what we think you should be looking at to, that'll indicate our success going forward. Can you reflect a little on that? And I just want to share a little with the listeners. I mean, Ashim was, for more than a decade, I don't know if it was a dozen years or 15 years at GE. You joined this startup, which is fascinating, because you don't always see that coming out of a big company like GE. It's grown. You took it public in 2021. So you really have demonstrated, you've communicated with this investor community over time. And now with everybody else, you're trying to educate the investors about AI and the opportunities it brings forth. So I'm like very curious how you continue to do that, Ashim. So forgive me, that's my long prologue here. But
I think there's there's a lot of confusion that could be met. So I think the first piece is really articulating what you're focused on. AI is a really broad term, right? So it could mean a lot to a lot of people. Self-driving cars is AI, right? Algorithm and predictive engines are AI. So everybody there's personal productivity related to AI that you can do, right? In terms of when I open up my credit card statement, it can automatically show and identify fraudulent charges. So it's really saying, one, like, what are your areas of focus? We are focused on enterprise automation and clearly being able to demonstrate the use cases such as claims management, dispute resolution, customs, manufacturing processes, pricing automation, where you can say we are intimately focused on these areas and these problems. That's, I think, the first piece of being able to communicate to it. The second piece is doing so with a sense of integrity. I think people tend to, a lot of companies oversell and they underdeliver. And a lot of investors overestimate the short-term benefit and they underestimate the long-term benefit of a company's strategy. So I think being very grounded and authentic in terms of where you are, when do you expect to see results, and what do those results come in? So like we talked about it with Agentic. We're super excited to be launching our new product lines this year. The first wave of that's probably going to come in proof of concepts. Everybody wants to know, when's your $20 million deal going to come in tomorrow? And people rebrand deals they've already been doing to try to fit that narrative. Making sure that you're authentic to say, hey, this year, this is where we're going to be doing proofs. This is how we're learning. And here's really where we start seeing that curve transpire. I think that's the second piece. And the final piece is doing so by asking questions in return. I think it's really important to understand the starting point for everybody. So my example is, ChatGPT came out, 2.5 years ago. Everybody's mind and opinions have shifted so dramatically from the beginning to the end. So when you're sitting in investor meetings, we always like to say to the last 2 or 3 minutes and ask them, what do you think? Where are you seeing the market go? What questions have we not answered correctly? And that is a recipe that we found beneficial for ourselves.
I wouldn't doubt some of what you just shared there might be part of the answer to my next question, but would love to go back to 2020, before this was a public company. What are the communication lessons that you've taken away? Again, I think you were an excellent communicator, no question, but this has been an interesting 5 years. What is the piece of advice you would give yourself, that CFO back in 2020, when it comes to communicating with investors? What is it that you would have told that person?
I think to make sure you also emphasize what are the things that could disrupt the market and how we are prepared to pivot. I think that's kind of the first, because you tend to have your plan. You're so bought into the plan that you have today. And then when things change, you immediately get questioned. And I think it's important to show how you are investing, not just for today, but how you're prepared to pivot if assumptions change. I think that's one piece of it. The second piece is really making sure you simplify your metrics. I think there's a pull to disclose more, to have more metrics that are out there. And I think to make sure that you simplify your metrics, you're very clear on what's priority 1, 2, and 3. An example for us is our customer count. I can increase my customer count by getting 1,000 customers that are very small shops that are not real enterprise shops. But the quality of our customer base is something that we've started emphasizing more than the quantity of the number of customers themselves. So I think making sure you simplify and you prioritize your metrics, I think that's a second lesson that I would say. And then the third is just being very clear on the definitions of your metrics. You assume everybody knows and understands. You can't clarify enough what your metrics truly represent. For what time period are they there? Are they lagging or are they leading indicators? To me, those are the three that I would say.
Excellent. Thank you. Thank you for that. Ashim, you've had a unique vantage point. I have to ask you a question about CEO, CFO, chemistry, working together. You've had this unique vantage point working closely with CEO Daniel Dines, especially during pivotal leadership transitions, and you've navigated that partnership clearly very well. What are the key lessons have you learned about CFO, CEO relationships? I'll put you on the spot with that one.
Yeah. Look, the first thing is not to be afraid to fight with each other. I think you have to be able to challenge each other. Daniel and I would say, I don't think there's a subordinated role. Like, I don't look at myself as a governance body. I don't look at myself as a subordinate. And I think Daniel wants to feel comfortable that he can scream and disagree with me without feeling like my motivation is going to be hurt. So it really starts by, as long as you're centered around what's best for the company, that's the first point. Because the moment you do that, you're going to fight for it. You're going to fight for what you believe with the company. The second piece is, I think, staying constantly in touch. It sounds very crazy. We create a very simple tracking list. It's a Word document. It's nothing fancy. And we go down, what are all of the things that we need to get done? And making sure we're aligned on who's doing it. Are we aligned on what priority that takes? And where does he need me to focus on? And where does he need to focus? So Daniel, for the last 7 months, is reconnecting with our largest customers, making sure that our technology that roadmap is really there. So he's kind of said, listen, I want you to really focus on our partner ecosystem in the short term. Bring that back to me. Let's really connect, and then we can connect the 2 data points. And then the last piece is having fun with it. I think you got to spend time with each other. If you're only talking about work, if you don't really know each other as people, you misinterpret how, like, work and life kind of intertwine with each other. And that chemistry means, when he shows up in a tired mood, or I show up in a stressed out mood, we understand each other because we can forgive each other quite a lot. And you need to have a certain amount of forgiveness to work with each other. And that is something I think that we've both done very well. And when we haven't, we've learned from it.
Just curious about the customer relation piece of all this. You mentioned how Daniel spending time with clients and customers as you're trying to see how they adopt these new technologies. Have you achieved all the visibility that you require now that you're a COO as well as a CFO? One would imagine, yes, you're more than ever. You have your lines of sight into your customers. Can you reflect a little on how you have worked to keep your lines of sight sharp?
Yeah, and listen, I don't think we're where I want us to be. We're still going. I think the first thing is segmenting your customer base. So we've kind of segmented our customer bases. Our customers for $1 million and below, our customers from $1 million and above. And then we really went down and said, who's a red? Like, who's at risk and who is green? And when you put that in a simple 4-blocks matrix, the first piece is, are you contemporary in your engagement on each of those boxes? So it's very easy. Like I said, sometimes one of our lessons, even in the last 6 months, your smaller customers, your customers that are $30, $50, $70,000, in this agentic and AI transformation, it's easy to get lost into the CIO of a Fortune 10 company. But do you understand what's happening with that smaller customer base? And I think the way you stay connected is, one, reading. There's a huge amount of wealth in your systems, whether it's Salesforce, whether it is our sales engagement tools, whether it is our recording of sales calls. I devote 1 hour just to go through deals and customers and read in each of those 4 segments per day. The second piece is making sure that's a core part of every operating rhythm you do. So when we do our quarterly business review, now we're doing key account planning. So that's a second piece that's there. And then the third is the sales operations function. I think pipeline visibility, how is pipeline moving? How are we segmenting pipeline? You get a lot of knowledge when you see a deal is either stuck, a deal is progressing, or a deal is regressing. So using that data is there. In all candor, I would say we just finished the Super Bowl. I'd say we're on the 50-yard line. We're at halftime for that. I still think we have a good ways to go to get where I think is a really good state.
Well, thank you for that. As we wrap up, Ashim, you've given us quite a few takeaways, but we're going to ask you for yet some more. Looking ahead to UiPath's next phase, especially as you continue to innovate at this intersection of AI and automation, what is your vision when it comes to company growth? What is it? How will that growth be achieved? What is your vision? How do you see it happening?
Look, the first comes in with every employee knowing that this is an incredible opportunity that we get to really take advantage of. So I think 90% of IT executives, they have processes that can be improved by AI and automation. 93% of them are extremely excited to be exploring it. So the first is, I think it's so important to make sure that the entire company knows this wave is for real. You can get caught up into interest rates and stock fluctuations in the short term. You got to first believe that the market is there and staying in touch with it. The second piece is, I think, building upon your strengths. Our strength is enterprise automation, and we've improved hundreds of thousands of processes. We have close to 11,000 customers, 300 customers who spend more than $1 million with us. On average, our customers are expanding, greater than 113%, which is our net dollar expansion rate. So we have a foundation to grow off of. Making sure we understand what is on their horizon and the problems they're solving, and focusing on that, I think is the second key thing. And in terms of what's the vision, we look at ourselves to remain a double-digit growth company. We look at ourselves being able to use that and grow that profitably, taking our cash to invest in what we believe is kind of the next 20 years of disruption and meaningful advancement in all enterprise processes using AI. That's really the simple vision that we have within UiPath. And frankly, trying to have fun along the way. I think having fun is the most important part. Experimenting, innovating, and not being afraid to make a few mistakes.
Ashim Gupta, great to catch up with you, and thank you for spending some time with us on CFO Thought Leader.
Thanks so much, Jack. It's been great experience for me. Thank you.